Hi, my name is Amy. Thank you very much for watching, and let's make some bad financial decisions together. So, now that we have made it through the worst of this dip, actually, let's knock on all the wood that we did make it through the worst of the dip for this time. But now that we've lived through a dip, let's figure out how to properly hedge our portfolios, yeah? Uh, this wasn't super fun. So, I like using testful.io to backtest because, like, let's go to finance.google.com, and there's a lot of different um, options that you could use, like bonds. You can compare that to a CHD, and then TLT. And then there's like Gubs. There's so many of them, and when you're trying to evaluate value ETFs, a size chart like this doesn't really give me the insight that I need for it. It's rather confusing because in some instances it's better than other instances. So, Testful, when you first go on the page, there's no portfolio. You can have some that are saved, but you just pick a beginning date, and some of the things I want to test this time have not been out for all that long, so we'll just go with from June 1st to today. That's just 2 months, and we'll start with $10,000, $0 added, just a closed caption test over here. We'll call this one, we'll just call this the default. And so the classic two-fund portfolio is just VOO and BND, and it has to equal to 100, because of course it does. And if we'd had this from June 1st to August 8th, we would have had $10,177. We would have had a 10.2% increase. Our maximum drawdown was only 4.5%, which is good. And you can do multiple portfolios at the same time, but I have seen that sometimes the answer you get when you backtest one portfolio at a time is different than when you have multiple portfolios, and I don't know why. But let's go on to a more, what is the bogglehead? Yeah, well, it's VX. I just want to know what the Vanguard. Okay. Are you actually going to tell me? Because it's like VXUS, right? I always forget what the third one is. VXUS, right? Yeah, okay. So the traditional three-fund portfolio for so the bogglehead is VXUS, and BND, and it's just 34, 33, and 33, so like 1/3 each. Let's backtest this. So we'll just call this P2. It'll have VOO, VXUS, and BND, and it's 34, 33, 33. So, oh my gosh, I am using a trackpad, and I just made the dictionary appear. Go me. I'm good. I'm good at this. Okay, so So here we go. If we had done the Boglehead, we would have less money than just doing a 60-40 VU and bond. But if we used Investing Simplified, Professor G, he does SCHG and SCHD because of the past performance of bonds, and SCHG instead of VXUS because just because it's international doesn't mean that it is more growth or more volatile. So you may as well just do a growth ETF. So I don't know why I'm still, anyway. VU, CHG, CHD. And the reason I'm doing this is that we have something to compare what I want to do and the point of my portfolio. Just to have, like, if I was a normal person with normal problems, here's what I would have in my life. So you still don't have as much as if you just had the 2-fund portfolio, and the maximum drawdown is more than the other 2, and your volatility is higher. There was one thing before we go much further. When we're talking about 2-fund portfolios, instead of VU, doing UPRO, and instead of a bond, we can do TMF, which is what is recommended on the left community in Reddit. So let's backtest this. So this is UPRO and TMF, 60-40 split, and then eventually I'm going to do this. Oh, it actually did the whole thing. Okay. For some reason before it wasn't doing the titles. We'll leave that there. So the ending value is more. But we do have a bigger max drawdown. It's more volatile. Like instead of it being 10%, it's now 32%. But you do have more money in the end if you can figure that out, and like the beta is much higher. So that's just up to your risk level that you're willing to tolerate. So what are we doing for the next portfolio? This is a good question. What I have a lot of is Misty. And what I need to figure out is what should I be using? So if I just do Misty and bond, total bond, I'm going to have less money than when I started out with. So I'm not going to record that. But if I change this to fiat, which is the inverse of Misty, we have way more. We have almost, yeah. So this is Misty and fiat. Maybe 60-40. So the maximum drawdown here is less than with the leveraged, more than if I had done Professor G, and way more than if we had used bonds. Another option here is if we do like 70 Misty, and then see, what I was going to do is because TLT is the treasury bond one. So if I did like 35 and then 5, we would have basically the same. Did I? No, I didn't even do that. That's because we didn't run the back test again. 25. Okay. So if we do Misty TLT 70 25 5, and this is a bunch of just recording this, and hopefully this is helpful for you or entertaining, but this is a step in the process of understanding, like, I don't mind having more volatility, but I don't think that my portfolio is properly hedged, which means that if I take out more margin, I would be in danger. And in the stock market, it counts. When you lose money, it's much harder to gain it back. So like we could have as much as almost, $11,300, but then it comes down here and it's only at 9,800. That's not great. So, let's see. This is slightly less good than if we'd used leveraged, and also worse than if we had done just fiat. I don't think that fiat, which is the opposite, it's shorting Coinbase, basically. And I just don't think it's a good long-term option. I'm just saying. A lot of people were trying to use I guess we could keep up on this. So if this is like SCHD, is that better or worse? The same? Okay. Just gonna copy that, paste it, and instead of that, it's SCHD. And for the comparison, no. Try that again. This is like $1 less, which is fine. The CAGR is a little bit less, but the volatility is more. That's how they get you. Wait, no, sorry, the max drawdown is also more, and the volatility is more. So you have less of an incentive to do the right thing. What about DGRO? Using like equities instead of, okay, so that's trash too. BND, okay, we're just getting worse and worse. I don't know what TNG is. So yeah, all of these options are worse than if we had done more fiat, but I just don't think in the long term, I kind of think that that's kind of fluky, if that makes sense. Like, a lot of people say that Coinbase is destined, or like Coney is destined for zero, which I don't believe in. I think that Coinbase is going to be around for a long time. But since this is shorting Coney and things tend to go up and to the right over time, it just doesn't seem like a good long-term play to, do a yield max sandwich. So this is better, I guess. The max drawdown isn't as much, which is nice. Oh, maybe I should fix that to do TMF. And TMF is the 3 times inverse of the VIX, I believe. Kind of throwing stuff. Okay, so this is the 3x Treasury bull. So basically we're saying TLT, but 3 times that. So we can try. Yeah, I think that, like, if we did 20 and like 10 year, it would be worse, right? Yeah. And then the thing was, I was trying to use SVOL as my hedge. And it moved in the same direction. Like, I was very disappointed. So like Misty and then SVOL. Like, yeah, it has less volatility, and it's the point of SVOL is that it neither goes up nor goes down, but because it is shorting the VIX and doing voodoo magic stuff, when there was a very, very sharp incline in volatility, it went down. And it was here on August 5th that I really wanted to basically have something that was completely inverse of it. And that's why I keep doing like fiat, because like when this sharp downturn happened, it actually was opposite because it's shorting the same thing that I'm in, and that's known as a strangle. Some people are trying to call it a yield max sandwich, but with me and doing margin, I would rather put like 20% into fiat and call that my margin. And if there's a very sharp spike in volatility, at least fiat will be up when Misty goes down, and Misty is my largest holding. And these are both Bitcoin plays, and I do have a lot of Bitcoin, so having something that's shorting Bitcoin and is not the worst thing for me to do. I think, correct me if I'm wrong, BitX. Is this an inverse? It's a 2x. There's one of these, Bitto. Okay, 2x short Bitcoin ETF. There's one of them. It's one of these, BTW. BitU I have. Is it just 1x bear? Lambo and Rect. We could try Rect, I guess. It's like on the day that it was there, I don't know if there's any covered call. Like, at least when fiat, when it goes down, like the net asset value goes down, this time for yield max, And it's not going to be this time every single time. But fiat, it has 111.48% distribution, first one, as opposed to Misty, which actually wasn't too shabby. It had 100. I thought it was 95%. Did they record that? Or is it just because the price of it fell so much? Anyway, so Misty has 107% and Fiat has 111%. So if you own both, does it really matter which one you buy if you're never going to sell? Sometimes Bitcoin will be up, so the price will be higher. Sometimes Bitcoin will be down, so fiat will be higher. And then the only thing that is kryptonite to both of these is the VIX being low volatility. So in that case, and I'm thinking out loud here, would it not make sense to just keep with SVOL? Because SVOL gets a 17% yield normally. And what that does is it's more profitable when volatility is low. So do I need something that's profitable when the volatility is low, or do I just put things in? Oh, also, while we're doing this, if we do fiat and QDTE, and we'll just do 20 and 10. So my thinking with this, if we do like 60 and okay, so I'm going to copy this over. Fiat QDTE, and that's 60, 20, and 20, so it's like a 60-40 split. And then okay, so it's not as much as if we just did large amounts of something, anything that is a treasury or a bond. But if you look here, it is basically the same as if you did 60-40 split. And it's more than Professor G's, it's more than the Bogleheads. And it's not more than like the traditional 3-fund portfolio. But this would get me the 100% yield for Misty. This is 100% yield for Bitcoin, and these are both Bitcoin plays. And then QDTE is a NASDAQ 100 pays out weekly covered call ETF, which is broad market. So it's a bigger maximum drawdown than if I had used just Misty and Fiat. Has higher volatility too than just a 60-40 split with Misty and Fiat. But the beta is more. But this would get me more diversification, because like QDTE is a broad market covered call ETF, and fiat is just the opposite of MISTI. So like, could I just do like SEHG in here? That would just be high growth backtest. I mean, I could. It would be worse results. Yeah. So this is like the TLT, but less. There's more bond type, like covered call ETFs out there. I just don't know them all off the top of my head. But I think let's go back to this QDTE. Yeah, the only problem is when it does this, the maximum drawdown of 13%, that's not great when you have a 25% margin. But I guess that means that did I ever just do what MISTI is? Like, what is the maximum drawdown for just like YOLO? We're just putting in back tests. So I would have $8,867, and the maximum drawdown is 23%. So QDTE, I think I said that right, would have that that drawdown, which is better. The goal is to get the line to not, yeah. Oh, you know what? I changed that and then I didn't change that back. But if we do like 60 and then 20 and 20 and back tested that again, yeah, that's less. Wait, no, that is more drawdown and less money. So there is that. Didn't I put something in there before? I really love having a negative 90% CAGR. That's not great. There was a okay, yeah. So if the maximum drawdown on this is more, and that's because there was a big spike in volatility. But this is protecting against Bitcoin and, well, just Bitcoin slowing down in its volatility. So as the market is less volatile, SVOL should be more profitable. However, hear me out, MISTI and fiat are earning 100% yield, which means in about 10 months to 2 years, they'll give me enough distribution, it's a return on cost, and then everything else, I just earn what I earn. If it reverse splits and I only earn half, whatever, it already paid for itself. if I have to put more in it to maintain the level of yield, then so be it. But yeah, this is this is this has been helpful for me because I've been wondering if I should do like TLTW, which is the covered call for TLT, then there's TLT, and then there's TMF, which is the 3 times TLT. So if I did like 5% of that and 10% that and 15% this, that does not add up to anything. Okay, back test. Yeah. Okay, so like TLT is a 20-year treasury bill. TMF is 3 times TLT. TLTW is the covered call of TLT, which pays about, I looked it up earlier today, I think it's 20, TLTW. I think they don't actually show it on their website, which is weird. You'd think that it would be a selling point. I just want the yield. Like, I didn't think it was going to be this difficult. They don't tell you like what the yield is. They just have the percentage. I'm not doing that math for you. I barely did the math for me. So I think it's like a 10%. It could be 25%. It's nothing impressive. That much I know. I think I think a lot of things. Let's just say it's about 15%. But obviously fiat with its 100% is much higher yielding, at least. We could try high real quick. This has been a half an hour long video, but I ain't got nothing else to do tonight besides feed my dogs. But they're sleeping right now, so high. We'll just do 30 of that. Because why not? I don't know what high is exactly, except it's another Simplify product that they keep trying to tell me is a good idea. Nope, it's still shitty. So yeah, the name of the game was if I had had $10,000 in June, in August, I would want more than $10,000. So I think the winner today, as far as having the most amount of money, is just a 60-40 split on Misty and Fiat. So if you're wondering which, I guess while we're here, I think if we just do like 30, 70, we can show that, yeah, so this is 10,818. If we did a 50 split, it's $200 less that you would have, but still phenomenal. And then it was 60-40, like it's another, like for every 20% or 10% that you have, that it's two. But you don't know if Bitcoin has a big run up, then fiat is going to lose a lot of money, it's going to lose value, and you might get a high yield, but you're going to lose a bunch of NAV. And I purchase Yield Max knowing that it is very susceptible to the underlying asset. And these are very volatile, and volatile doesn't mean always go up. Volatile means it goes up and down. So is the trend that it goes up and it generally stays above $20? Or is it like Ulti and it just keeps going down and it'll just reverse split, reverse split, reverse split? So I don't really want to put my money in something that is going to just not have a stable value, and just I own the same amount of shares and it might earn over 100% yield, but I don't know, it just doesn't seem like a good investment. Doesn't mean I'm not going to do it, but to me, anything that's shorting the market for the long term, like holding it, is not the best thing. But crypto's crazy, and it's always going up, and it's always going down, and it's never staying the same, except for, in the crypto bull markets, or in the crypto winters. So, we'll see. YOLO. But I do like, I'm going to say that this is the overall winner here, because QDTE is still a covered call ETF, but it's a 0 days to expiration, which means that it has the opportunity to capture some of the upside overnight. And it's broad market. It's covering the entirety of the NASDAQ 100. So I will probably do that. And RDDTE. Why does nothing sound right coming out of my mouth? RDTE, the new Roundhouse small cap one that is coming out sometime Q3 and can't come soon enough. And I think RDTE might actually be the better hedge in this situation, because when the market is going down and the rates are low, then all of a sudden the small cap becomes more volatile, and then we get to get paid off of that. So, QDTE is not doing too shabby. It's at like 67% yield. It's just that Yield Max has over 100% yields going on over there. So yeah, in my situation, I'm probably going to do this Misty Fiat and QDT. But if you're a regular person who's not crazy, yeah, I would go with Professor G's. This, when I have enough income from my high income journey, this will be more or less what I'm doing. I'll probably do, let's see if I can remember, SPMO, which is the S&P 500 forward momentum, and then DGRO, which is a high growth, and then probably just still SEHG. But we have to change these percentages. Okay. Yeah, so this would go pretty well. That's interesting. So, the forward momentum, changing that back, changing my mind. Yeah, so I just think that there's ways to manipulate this and get it done, but I think there might be someone at my door. So I will see you all later, and thank you. Bye.